Coca-Cola. You think Coca-Cola sells soda. That's the surface level story. What they actually sell is habit. Somewhere on Earth, millions of people are drinking Coke right now without even thinking about it. At restaurants, airports, weddings, gas stations, family dinners. That's the power. Coca-Cola built something Warren Buffett loves. A product people buy automatically. No convincing, no complicated sales process, just repetition. And here's the scary part. Water is free, yet people still pay for flavored sugar water every day for over 100 years. That means the product stopped being a drink a long time ago. It became culture. The business works like a psychological subscription hidden inside everyday life. Buffett once said his favorite holding period is forever, and Coca-Cola became one of his biggest investments because he understood something most beginners miss. Boring businesses often make the most money. While people chase the next hot AI stock, Coca-Cola quietly collects billions from human behavior that barely changes. That's the real lesson. The richest companies don't always invent new needs. They own old habits people can't stop repeating. Visa. This company might be one of the greatest businesses ever created because Visa doesn't even lend money. Most people don't realize that. They think Visa is a bank. It's not. Visa built the rails money travels on. Every time someone buys coffee, shoes, groceries, or books a flight, Visa takes a tiny cut. Tiny from one person, massive from billions of transactions. Imagine building a toll booth on a highway where the entire world drives every day. That's Visa. And the craziest part? They make money whether you buy smart things or dumb things, rich or broke, disciplined or irresponsible. The machine keeps running. During interviews, investors like Monish Pabrai call these businesses spawners of cash. Because once the network is built, the cost of processing extra payments is tiny compared to the profit coming in. This is why top investors obsess over network effects. The more people use Visa, the stronger Visa becomes. And the stronger it becomes, the harder it is to replace. Most beginners look for cheap stocks. Smart investors look for businesses that own infrastructure people unconsciously depend on. That's a completely different game. Apple. People think Apple sells phones. Wrong. Apple sells status, convenience, and identity. An iPhone is not just technology anymore, it's emotional. That's why people line up outside stores for products that look almost the same as last year's version. Apple figured out something dangerous about human psychology. Once people enter the ecosystem, they rarely leave. Your photos are there, your passwords, your messages, your AirPods, your apps, your habits. Switching becomes painful. That's called ecosystem lock-in, and it's one of the strongest business weapons on Earth. Charlie Munger once praised Apple because it became more like a consumer brand than a technology company. That changes everything. Technology becomes outdated fast. Brands don't, especially brands tied to identity. Apple also mastered pricing power. They can raise prices while customers still buy. That's a superpower in business. Most companies fear charging more because customers disappear. Apple raises prices and people call it innovation. Think about how insane that is. The real lesson here is simple. The companies that print the most money are usually the ones that become emotionally attached to people's daily lives. Costco. And this company completely breaks beginner logic. Costco barely makes money selling products. That's the weird part. Their real money comes from memberships. People literally pay Costco every year for permission to spend more money inside the store. Read that again slowly. Imagine creating a business where customers feel lucky to enter the building. Costco understood a hidden truth about trust. If customers believe you consistently save them money, they stop checking prices elsewhere. That trust becomes addictive. Investors love Costco because it's almost anti-greedy. The company intentionally limits profits on products to keep customers loyal for decades, and loyalty is worth far more than one expensive sale. Jeff Bezos reportedly admired Costco because of how obsessed they were with long-term customer trust. While most companies squeeze customers harder every year, Costco plays the long game. That's why people buy giant tubs of peanut butter and 48 toilet paper rolls like they're preparing for the apocalypse. The business feels less like shopping and more like joining a tribe, and tribes spend money together for a very long time. Microsoft. Microsoft used to be seen as boring. Then quietly it became one of the most powerful cash machines in history. Why? Because businesses around the world became dependent on Microsoft software like Oxygen, Excel, Word, Teams, Azure, Windows. Entire companies run on these systems every single day. And once a business depends on your tools, switching becomes risky and expensive. That creates recurring revenue. One of the most powerful concepts in investing. Instead of constantly hunting for new customers, Microsoft gets paid paid again and again by the same companies every month. It's like owning an apartment building where tenants never want to leave because moving would destroy their business. Satya Nadella transformed Microsoft by focusing heavily on cloud computing, and suddenly Microsoft wasn't just a software company anymore. It became digital infrastructure for the modern economy. Most people think wealth is built from flashy ideas, but the biggest money is often made by becoming quietly essential. That's what Microsoft mastered. Nvidia. This company shows what happens when one business controls the tools behind a gold rush. Everyone talks about AI right now, but most people are chasing random AI apps while Nvidia sells the picks and shovels powering the entire industry. Their chips became essential for training advanced AI systems. And when every major tech company needs your product at the same time, your pricing power becomes insane. Jensen Huang, Nvidia's CEO, spent years building technology most people ignored. Then suddenly the world woke up and realized AI runs on Nvidia hardware. This is a pattern smart investors study constantly. During gold rushes, the biggest winners are often the people selling tools, not the miners themselves. Nvidia became the tool maker of the AI era. But here's the deeper lesson most people miss. Nvidia looked expensive for years. Many beginners avoided it because they focused only on stock price instead of business quality. Great companies often look expensive before they become even bigger monsters later. That's why legendary investors spend more time studying businesses than staring at charts. And when you put all 6 companies together, something strange appears. None of them became rich by being cool stocks. They became rich by owning systems people repeatedly use without thinking. Habits, infrastructure, ecosystems, memberships, software dependency, industry tools. That's how real money is made in the stock market. Not by guessing random price movements every morning like a casino addict, refreshing Robinhood at 2 a.m. hoping his portfolio magically recovers. The real game is owning businesses that quietly collect money from human behavior year after year. But here's the part most people miss. Great stocks won't save you if your habits waste your time. The top 1% don't just invest differently, they structure their entire day differently. And once you see how they manage time, you start understanding why some people stay busy, while others build empires. So, watch the next video. How Top 1% CEOs Manage Time Differently Explained.